Well, first and foremost, we definitely see an improvement in business sentiment and cautious optimism heading into 2013. If we wind the clock back 5 years, India had exited this Hindu rate of growth of 4%, was benefiting from extremely strong global liquidity conditions and a strong domestic demand story, all culminating in 8% plus growth over a consistent time period. If we fast forward to the middle of 2012, India found itself at the opposite end of the spectrum. Growth had slowed to an anemic 5.5%. Now, why had this happened? Essentially, really, there was a widespread degree of hubris within government. The consensus view among politicians and policymakers in general was that whatever happened in the globe, India was going to be able to record 8% growth. They severely underestimated the impact of the global financial crisis and their own ability to deal with the fiscal consolidation issue. And as a net result of that, India's favourable domestic conditions and business confidence were severely eroded. One of the key ways that we've played India within the portfolios, both directly and indirectly, has been rural consumption. The Indian growth story up until this point has really focused on the 50 large cities with populations of 1 million people or above. The reality is far different, and 70% of the population still live in rural India. The growth profile of rural India is actually far better aligned than the major cities, and some of the trends we are seeing within rural India are, for instance, the move from rural to non-rural income. So, for instance, agricultural workers that are very heavily dependent on seasonal factors and the twice-a-year harvests for their income now have a regular monthly income. You have 150 million people moving over the next 10 years from the poor class into the middle class of India, who will all have the ability to obviously spend more money. You have the rising aspirations of the youth, which are bringing brands into the household, and the service sector is now accounting for more than 50% of rural GDP, so areas such as transport, infrastructure, education and home building are all growing very rapidly indeed. One of the ways we have really played this theme through our portfolios has been through direct investments in a white goods manufacturer that builds washing machines and air conditioning units. We have a very rural housing loan provider and a cement company that only supplies to rural construction companies for home building. Elsewhere in the portfolio, some of the sectors we're playing on the domestic recovery story are the insurance and banking, that's private as opposed to public banking sectors, and this move towards digitalisation within the TV industry. So we have a cable TV provider, a national television cable provider, who will be benefiting from India's rollout to digital TV by 2014. So we don't expect to see aggressive policy action in 2013 or a swift turnaround for the country, but we do see several positive factors that point towards a more positive outlook for next year. These include major inflation inputs and commodity prices coming off their peaks, monetary easing from the RBI, and of course a policy freezing to thaw next year, leading to some key infrastructure and capex spend on the investment side. All of this should result in a net positive for the country next year.